Hi, I'm Peter Rose, founder of Longwood Currency Trading. Why aren't you having fun in your Forex trading? What's the issue? Or do you even realize if you're not having fun? Forex trading for us as retail traders shouldn't be a job. It should be a hobby that we have, a sport, an activity, not hobby in the trivial sense, because it's deadly serious. You're talking about money, it's serious. But that doesn't mean you can't have fun doing it. If you play poker, you have fun playing poker, even if it's high stakes. And Forex trading is pretty high stakes. You're pushing around the down payment of a house on your bank every time you make a trade. But if you're saying, well, how do I have fun doing something that's so difficult? There's the problem. Because you've been ingrained into thinking that it is difficult. It's not difficult. Forex trading is simple, and the reason it's simple is because the market is so complex. Through all that complexity, you can't solve all of that. All you need to do as a retail trader with your $3,000 account or your $300,000 account or whatever it is that you're trading with is you carve out a little piece of that market that you can become an expert at, work up some rules that make sense to you, and enjoy the process. You can't take a $10,000 account and trade 30 lots against it and have any fun, because the risk of ruin is so high. If you get your leverage correct, and I mean, you trade whatever leverage you want. I trade 10 to 1. People are going crazy right now because you're all trading at 200 to 1, right? You're going to go broke, and you're tense, and you're working it, and you're having a stressful time because you're going to lose that money. You're trying to take that $1,000 and run it to $30,000. Can some people do that? Yeah, sure. Can you do it? Well, if you're struggling with that, no, you can't. You won't. The person that can take 1,000 and run it to 30,000 has a lot of experience, and they are trading at 200 or 500 to 1 leverage, and they're comfortable with that because if they lose the $10,000, they've got another $10,000 behind it, and another behind that, and another behind that, 6 figures behind that. So there's no fear of loss. And there's the big problem that we have that takes something that should be fun and making it into something that isn't, is because we have more of a fear of loss than we have of a want for gain. My karate master taught me that so many years ago, that as human beings we have more of a fear of loss than we have a want for gain. But if you search yourself, that's true. That there's a hesitancy there in doing something new, in taking risks, and fearing that you'll look stupid doing something. If we look at the fear of loss as the reason for stress, for the reason for not having fun, right? You could solve that problem. 90% of the currency traders that start currency trading, 90% of them are going to lose 90% of their money very quickly, 90 days. That's the statistic that a large retail Forex broker many years ago came up with. Is that going to cause you to be afraid of being part of that 90%? Well, that 90% loses all their money. But losing is part of the game. So if you forget about losing all your money and say, every time I lose, I'm going to learn what not to do. And when I've lost enough so that I know what not to do, guess what? I'll know what to do. So now you embrace the loss. You look forward to that loss because it's a learning opportunity. But if you ever lose and you don't learn something, then you're wired up wrong, and you probably shouldn't be trading at all. So I think that if you just change the way that you think as I've said many times, again, from my karate master 50 years ago, 55 years ago, the only way we can change who we are and who we would like to become is to alter the way that we think. Because it's a process of changing thought, and thoughts are things. It's taking something that's not real. Price action is not real. I mean, I have this finger is real and this finger is real, but when I put them together and I form an X, the X isn't real. These are real, but the X isn't. The X is an abstraction. The X is information. Fear is information. There's nothing real about it. Well, you can look and say, well, I'm going to lose the money, and so therefore I'm afraid. But losing the money may be real, but the fear is not real. That's something you create in yourself. The other problem that you might be having is that when you win, you jump up and down and you have to go out to dinner and you celebrate and all that stuff. If you want to be having those highs, you have to expect an equal low. That's the part of the yin and yang of nature, as the Chinese would put it. Or Einstein in his E equals mc squared equation. You can have good and evil, but you can't have all evil and you can't have all good. There's a blending between those things. It's the fabric of the nature that we live within. Forex trading is part of that fabric of nature. You're not going to lose all the time, but you're not going to win all the time either. If you win and you jump up and down and get all excited and blow your mouth about how great you are, oh, I just made, $40,000 and I'm going to buy a new Lambo. Okay, then you better be ready to take a severe depressive period in your life when things don't work out for you. Don't get your bowels in an uproar about it. When you brush your teeth in the morning and you dribble stuff out onto your chin, that isn't exactly what's supposed to happen. But are you going to become despondent because of that? Are you going to say, oh, I must be getting old and feeble because I've got toothpaste dribbling out the side of my mouth? No, you just brush your teeth and wipe your face off. And a loss is the same thing in trading. It's just part of the process of trading. So you don't get really wound up about it. Well, if the process of trading is a little bit of loss here, then there's a little bit of gain over here. And all you try to do and what you have control over is don't try to eliminate the losses and maximize the gains. Just try to make more gains than you have losses. And as you become more comfortable with that, there are ways that I teach when I work with people to create a rule that eliminates the loss issue from your trading so that you now only have to focus on the winning part, which is what we should be doing anyway. How many times do you go in and you watch these folks that are talking about trading and they've got their chart up and all they're talking about is the loss point is here and we're going to do this and they're structuring this problem here and all this kind of stuff, and if the thing goes wrong then this is what we're going to have to do. No wonder so many people are filled with an anxiety in their trading. I don't teach any of that stuff. Why should I? I want to look at the gain. I want to look at the money that I'm going to make. If I get it right, look at what I'm going to get. Look at what I have the potential of making. Why else would I trade? Why else should you trade? That doesn't mean that we're greedy, and that's where the high leverage comes into play. If you're trading at 200 to 1 or 500 to 1, you're hoping for a freaking miracle. You're hoping that they're going to run that $10,000 account to 6 figures, which in 6 lucky hops, you'll be able to do that at 500 to 1. But the risk of ruin, which you should look that up in the dictionary if you're not familiar with the term, it's a mathematical term, the risk of ruin is so great. If you're driving your car, do you wear a seatbelt? If you don't, you're stupid. I'm sorry. The seatbelt is there to mitigate risk. So if you're not wearing a seatbelt, you don't understand the mitigation of risk. You're saying it's an affront to your personal freedoms. Fine, kill yourself. Doesn't make any difference. But those that are practicing risk management properly in their lives, put a seatbelt on. That mitigates the risk of ruin. Because without a seatbelt, if something were to happen, the chances of you getting seriously injured go up astronomically over what you would if you had a seatbelt on. I know, personally. I was in a car accident in 1980. It screwed me up for life. And it wasn't that bad. I had my seatbelt on. Somebody rammed the side of my car, threw me up against the curb, tipped the car up. My head hit the window, took the driver's window out, and twisted my back and screwed me all up. If I wouldn't have had my seatbelt on, I could very well have gone partially out that window and then had my head cut off as it came back in. When you can be comfortable with the thoughts of risk management, rational risk management, of which trading at lower leverage is one of the hallmarks of that, then you can trade comfortably saying, gee, when I lose, I'm going to lose this much. But look at the potential for the gain that I'm going to have. I'm 75 years old. I've been involved in the financial markets since the mid-1970s. It's 2024, April of 2024 right now. So from the mid-1970s, I've been involved in studying the financial markets, stocks, options, futures, commodities, financial futures. 2007, I found the currency markets, the FOREX market. I was doing real estate. I've been doing real estate for 40 years. Found the currency market in 2007. So I've seen this progression of the financial turmoil that people can get themselves involved in. It doesn't take you 5 years to be an expert. It doesn't take you 6 months to be an expert. It takes you as long to be an expert as it takes you not to be afraid of what you're doing. Because if you're not afraid of what you're doing, it means you have control over your risk. Once you have control over your risk, it's fun. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.